Okay, we are recording. Welcome everybody. We're gonna give everybody probably 2 minutes to get themselves settled, and then we will introduce ourselves, talk a little bit about why we're here tonight, and certainly jump into the content. But let's just hold tight for about 1 minute. Get yourselves comfortable, situated, grab a drink, and we will dive in. But like I said, give us 1 minute, and then we'll get ready to roll. All right, so a couple people are still shuffling in here. We got a pretty packed room tonight, and we're excited about that because I think we're pretty important subject matter that I know is pretty impactful for quite literally millions of households across the country, and obviously to some extent everybody that's joining us tonight. For those of you that maybe know us, recognize us, at least a couple of us on here. Again, I'm Matt Carpenter with College Funding Services. Up here in Boston, we got Bill Rabbit down there in New Jersey, along with some other New Jersey folks, Jeff and Ken out in Colorado, and we got Will down there in Tampa, newly crowned Super Bowl champion Tampa Bay Buccaneers. So, I mean, little housekeeping stuff first, administrative stuff. We know there's a ton of questions. We know we're going to get to a lot of those tonight, and we're going to hit a lot of those in the presentation itself. But for those that have particular questions, please put them in the Q&A as opposed to the chat. If you want to remain anonymous, you can do so, and we'll try to answer everything we can in real time. Okay. Now we're not going to be able to get too far into the weeds with your particular situations, but everybody's going to have the opportunity to book a one-on-one follow-up after the fact. We'll share some details before we close out tonight, but just keep that in mind. If we don't get to your question tonight, we will get to it in the coming days and weeks. Okay. So for us at College Funding Services, right, we've been at this for a long time. And one of our biggest pain points is the fact that, once we send families off to college and get them through college, we don't really service them beyond that college graduation. And everybody's kind of on their own after the fact. And we know there's still a lot of questions that remain unanswered, and especially for families, and there's a ton of them that have to borrow in some capacity, whether that's students, parents, or both. Are they doing it the best way? If we have federal loans, are we in the right repayment plan? If we have private loans, is that as optimal as it can be? And that's not our area of expertise. We're well versed, but we're not experts. So we have proactively sought out experts in this field for quite literally years. We got introduced to Jeff and his team a few years back and have been talking ever since, along with a bunch of other firms, but we thought Diploma Debt was the best fit and who we were the most comfortable with in terms of kind of handing our clients off to. So that's why they're here tonight, and they do it the same way we do it in terms of leading with education and trying to make sure that you all understand how this works, and then specifically what's the best situation for your particular family. Okay, so that's what we're going to try to teach you over the next hour here. And again, for those of you that have follow-up questions after the fact, you're going to have the opportunity to meet with these guys one-on-one. It's something that they don't charge for, to make sure that again, you're in the right spot just out of the gates here. Before I kick it over to Jeff and his team, the last thing that I'll say is I popped in the chat a link to a petition. Okay. Now, if you follow us at all, you've been hearing us speak a lot about some of these FAFSA changes that are starting January 1st, 2022. And quite frankly, they're going to screw a lot of families. And even if you're through this, hopefully you have some empathy and some sympathy for folks that are about to go through this, because it's going to get worse from a financial standpoint if these FAFSA changes do in fact go through. So we're trying to do something about it. We're not sitting on our hands. We're actively trying to get in front of Congress and the Department of Education and get enough votes or signatures rather on our petition to try to make some noise. So if you're open to it, please at least investigate that and see some details in terms of what we're talking about. And if you agree with what we're trying to make happen here, please sign it. So really excited for you guys to join us tonight. We've been trying to find a solution for a long time. We feel very confident that we found it here. And again, I think it's going to be, if nothing else, get you guys super educated tonight. And any follow-up questions, you're going to have the opportunity to meet with these guys after the fact. And I think that's my piece here. So I want to kick it over to Jeff to introduce himself and his team. And these guys are going to take great care of you.
Hey everybody. First off, I want to thank Matt and Bill for having us and agreeing for us to put this webinar for you folks. My name is Jeff Skinner. I founded Diploma Debt in 2015. During that time, I just kind of saw a big need where people needed some education and some guidance during this process, get settled with student debt. And it was a situation where I felt at the time I had the opportunity to kind of make something happen and hopefully have a positive impact, helping out some families during this period. So I'm not going to give a whole big speech here. I want to say thank you. I hope you guys will like what we're going to say tonight, and have some follow-ups. And then I want to kick it over to two highly trained people on my team, Diploma Debt, Ken O'Connor and Will Stallings, and they'll run you through the bulk of the presentation, and we'll be here for the questions afterwards. Ken?
That's great. Thank you. Thanks a lot, guys. And we're going to go ahead and kick things off with our presentation. So thank you for the introduction. And Matt, Bill, you guys done a fantastic job serving so many families through CFS over the years, and it says a lot to follow up with them with this important knowledge to help them pay off their student loans, right? The reality is, even with financial aid and scholarships and all the free money that can be used to pay for school, there's sometimes a gap, and student loans were necessary to help fund that gap. And now that students graduate school and they get out into the job market and they're working and they're paying their bills, how awesome it is to find the right resources to help people pay back their student loans and get them into better financial footing into the future. So thanks so much for having us today. So Diploma Debt, that's our company. The presentation, Consolidate the Right Way. We're going to take you through some quick introductory notes on how to handle a student loan consolidation. Go ahead to our next screen. Good. So student loans are on the minds of everyone these days. It's a media zeitgeist. It's in memes. It's everywhere. Chances are someone other than yourself that also has a student loan, and we don't want to let them hold us back. Excuse me. We don't want to let student loan debt get in the way of our futures. But you got to admit, the memes have been amazing when it comes to student lending. So we're going to look to find some ways to find the solution that can help you knock out this debt and move forward with your life financially. Now, a quick update from the federal government side. Will you be ready to resume repayment on your student loans when the time comes? The good news is that we've been given an extension by executive order to allow student loan repayment to be suspended until October 1st, 2021. So that gives us a few months of runway before we have to worry about making an immediate payment in certain circumstances. But depending on what loan program you're in, you might not be qualified for that executive order. So we're going to discuss more about that as we progress. But the big idea here is, will you be ready to resume repayment? And are you comfortable with the facts when that time comes? Because this little pause we have in student loan repayment is going to end at some point. Will you be ready to make those payments when the time is happening? So the biggest concerns out there are, what are my options? Right? It can become a little bit of an overly confusing process to figure out how you're going to pay back your loans. What if my life changes? What if I have new members in my family? What if I've gotten married? I have kids. What if there's been changes in my family size? Right? What if I have new dependents in my life? Will that impact my loan repayment? Well, if it impacts you financially, it just might. We're here to help you think a little bit bigger about your situation and realize that maybe you might qualify for student loan forgiveness, which would drastically change your financial circumstances. But if you were not aware of how that program works, you might miss out on it. And who can I talk to? Last thing you want to do is get any old 1-800 number to call a random person to talk about as something as serious as a student loan debt that might be considerable right now. If you don't have someone working with you to walk you through that process, it can become overly confusing, and it's something you don't want to really regularly deal with, right? There's more fun things to handle. That's why we try to make the process a little bit easier for you. So about us, we were founded in 2015. We recognized back then that there's a lot of young adults finishing up with higher education, working, moving into the workforce, but they were having some challenges, maybe taking on more debt than they expected. And maybe the job market didn't happen the way they hoped it to. The amount of income maybe was a mismatch to the debt incurred during the degree. Now, fortunately, the Department of Education has rolled out some programs to help people mitigate the problems associated with paying back that debt. But as we know, that can be a confusing process. It's overly bureaucratic, it's complicated. So what we specialize in doing is really working kneecap to kneecap with our clients, or now virtually over the phone, in order to help people get the solutions they need to move forward. See, what we're trying to do is cut through the confusion, cut through the bureaucratic red tape, and deliver up an option that makes a lot of sense for you. So here's some key statistics to expand your minds. There's over 48 million borrowers outstanding right now. That's a huge figure, a huge segment of the population. And it's now ballooned up to about $1.5 trillion in outstanding balances. I remember back when it was under $1 trillion just a few years ago. So it seems to never end. On average, about $37,000 is outstanding for most graduates that are recent. Some people have a little bit more than that. Some people have less. Hopefully, if you have a little bit higher debt, the income you're earning from your job is helping to pay it back. But that's not always the case. And finally, we have, or before that, 11.2% are at 90-day delinquencies, and about 40% of people under 30 have some sort of student loan debt. Okay, so that's a lot of people. It's considerable. And even if your student loan debt might seem a bit manageable, not really a big deal, chances are pretty good you know someone that has a lot of student loan debt that needs some help as well. So what kind of loans can we service? Okay, federal direct loans, of course, we can service those. But I want to highlight this next one. It's federal family education loans. Now, they were called Stafford, subsidized, unsubsidized. This program changed a few years back. If you're currently still paying off a FFEL loan, you might not have qualified for the program updates that have occurred in the direct program. So we would definitely want to be in contact to see, where you're at with that. Just above that, though, it mentioned federal direct loans. There's subsidized, there's unsubsidized, Parent Plus, Grad Plus. Maybe these words are ringing a bell right now. Sometimes some of the toughest things, remember exactly what it is you have when you look back. Kind of like an insurance policy, you take it out, you throw in a drawer, you hope you never have to look at it again. The thing about loans is that you're responsible for payment until it's totally paid off, right? So once you start getting acquainted with some of this terminology, you can understand and get a better handle as to how to look forward to paying it off. And then finally, with private loans, look, private loans work a little bit differently than a federal loan program. So if you have a private loan, we're going to want to take a look at the big picture as to what you have. When we can refer you to a solution that would make sense based on the partnerships we've established in the industry. But of course, we want to make sure we're pointing you at least in the right direction. All right, guys, so maybe these are some terminology pieces that'll get your noggin jogging. Maybe these words are a little bit familiar to you. Is your loan currently in deferment right now? That only happens for a brief period of time. For example, when you're in school, you can put your loan in deferment. If you're graduated, your loan's probably no longer in deferment. It's officially in repayment. That's where most people are. And when you're in repayment, you're consistently making payments month in, month out. And along the way, you're actually helping to build your credit, which is nice. There's also forbearance. Now, forbearance, it appears to be something that can help you if you're in a financial jam, but it can actually hurt you long-term if you're not managing your student loans correctly. Forbearance basically puts your loan payments on hold, but then the interest will begin to accumulate on the loan and it will stack up, leaving you with a much larger debt. So it might be helpful to put your loan payments on pause if you have a financial issue where you can't afford the payment, but that's not a long-term solution to your debt. It's actually going to make your debt more expensive to pay off over time. So forbearance might seem helpful, but you got to be careful and look at the impacts financially long-term. And then finally, default, it's what we all want to avoid. If a student loan is in default, it means it's not being paid back, and it also will hurt you financially very much. If you are in default of a student loan, you won't qualify for any other student loans after that. You won't qualify for any financial aid to go back to college, and it's really going to wreck your credit, and it's going to hurt your chances for qualifying for future loans. So we want to avoid default as much as possible. That's why when we get in front of clients and help them resolve this, get them in a position where they're able to manage their debt, it's going to keep their credit healthy and strong rather than falling apart. So some serious stuff. So serious question here, guys. Are you on the wrong payment plan? Okay, let me run these terms by. Maybe they also sound familiar. Standard, graduated, extended graduated, extended fixed. If you are paying your student loans back using one of these plans, you're not going to qualify for the same types of loan forgiveness. Okay. So you have to be mindful as to how you're going about managing this loan. Thing about student loans is that it's this huge debt that happens when we go to school and we kind of want to just manage our life and pay it off every month. And we kind of put the thing on cruise control and forget about it. Whatever paperwork they put in front of us, we sign off on it for just, send the payments and pray, right? Hopefully the thing will work itself out. But the reality is if you don't take a closer look as to what it is you have, you could end up hurting yourself and losing thousands of dollars over the course of repayment. And all it takes is a little bit of knowledge to take a closer look. So don't let that get in the way. If you just want to, forget it, right? Don't let that mental obstacle get in the way from you learning and taking a deeper dive into what's in your student loans to learn how to solve it. I kind of look at student loans like snowflakes. They all have similar patterns, but each individual snowflake is unique. And it's the same thing with student loans. They follow very similar patterns, but each individual circumstance will be unique. And we take that into account when we figure out your profile for paying off your student loans. So guys, I just want to pass this microphone over to my friend, Will Stallings down in Tampa Bay. I know he's been real excited the past 2 weeks, just the biggest 2 weeks of Tampa Bay's history, my man, right? But I'd love to pass it over to my friend, Will Stallings, to talk a little bit about public service loan forgiveness. Will, take it away.
Thanks a lot, Ken. Hi, everybody. So as far as public service loan forgiveness goes, there's a lot of misinterpretations of how it really works. Basically, if the benefits are you get a lower monthly payment and you also lower your total payout amount, which is at the end of the day what everybody wants when it comes to any loan, to lower the monthly payment and lower the payout amount. And the people who qualify for public service loan forgiveness is anyone who works for either a nonprofit organization, one that's 501c3 tax exempt. So that's most hospitals, most universities, most social services, community programs, things of that nature. Also, any sort of government entity, whether you work for a city, county, state, or federal job, you qualify for public service loan forgiveness. And there's a lot more to it, which, when we schedule consultations, we can dig into a lot deeper. But anyone who works for one of those types of employers definitely qualifies. And in most cases, from what we've seen, there's a great deal of people who are getting their total payout amount reduced by over 50%, just because of who you work for. And I know a lot of times your employers aren't aware of this, so they're not sharing this information with you. But if you work for a nonprofit organization, community college, most state universities, if you work for a nonprofit hospital or any kind of government entity, you qualify for public service loan forgiveness. As long as you're scheduled to work 30 hours a week, which I'm sure everybody is, you'll definitely qualify. All right. But in order to take advantage of that program, you have to have the right type of loan and you have to be on the right payment plan. And often what we find, people will come to us and they'll say, well, I've been working here for, so many years, I should get my loans forgiven now. And unfortunately, that's not the case for them, because not only do you have to be working for one of those types of employers for a certain amount of time, but you have to be on the right payment plan, making those payments during that time, and you have to have the right type of student loan. And so if depending on the type of student loan you have, you may not qualify, but what we would do is we would convert your student loan debt into that type of loan. That way you can qualify going forward. All right.
That's exactly right, Will. And it just goes to show you, if you let it sit and you try to ignore it, it doesn't just go away by itself. And if you think you qualify, you might forget what it is you actually do qualify for. That's why I got to take a deeper dive into what it is you have. So let me just talk about the Do You Qualify slide here. The reality is with our program, almost everybody's going to end up qualifying. The only minimum balance we have is $1,500. There's no credit requirement to take a closer look at this, right? There's no income requirement. There's no minimum qualifications like that. Private loans are not eligible as part of that consolidation. They're a little bit separate. But borrowers cannot currently be full-time or part-time student in order to make it happen. So why don't we take a deeper dive into how these loans can actually work if you get them restructured? Well, I'm going to show you Well, actually, I'm sorry about that. We had the benefits to this to the program. What it can do is help you get one monthly payment. It helps you lower the payment amount. It's going to help you improve your credit score, which is fantastic, especially if you're looking to make moves in real estate right now. If you want to help get your credit cleared up before you qualify for a super low mortgage rate, improve your debt to income ratio, get an end date to your federal loans, maybe qualify for loan forgiveness, and along the way, keep your privileges. So that way, if you wanted to borrow more and go back to school, you can do that. So as I was saying, Will, I wanted you to show some of these awesome examples to help walk through what saving a ton of money feels like. Maybe you could show us some more.
All right, sure. So a lot of people take advantage of forbearance because in most cases, forbearance is easy to get. You don't have to qualify for it. You get about 3 years of forbearance for every loan you have. So that's 36 months of forbearance per loan, okay? And getting your loans put in forbearance is just as easy as you calling your student loan lender, or in some cases, just logging into the website, logging into your account and clicking the magic forbearance button. But what happens is while you're in a forbearance, and let me back it up a little bit. Right now, because of the pandemic, anybody with a direct loan is in an administrative forbearance. That means right now, interest is not accruing on federal student loans, but that's only because of the CARES Act, which is over in October. However, a lot of you prior to the CARES Act being put in place, you've been taking advantage of forbearance in the past. And as far as as far as you're concerned, you were doing the right thing. You weren't ignoring the loan. You just took advantage of the program that's available to you. The problem is with forbearance is that your loans are accruing interest the whole time. So by the time your forbearance is over, you end up with a higher balance, but you have the same amount of time to pay back the loan. So now you have a higher payment because you didn't extend the life of the loan. You just put the payments on hold for a little while, if that makes sense. Okay. So I'm just going to give you guys a couple examples here. So for example, we have one borrower who owes $58,500 in student loans. Okay. He did deferment of forbearance, for as much as he possibly could. And now, he originally borrowed $58,000, but currently because of deferments and forbearance over the years, he now owes $71,845 and his monthly payments are $798 a month. Okay. So what we were able to do based off that person's circumstances is lower the monthly payment down to $78 a month. And instead of them paying back the $71,845, they're paying back a significantly lower amount. And of that amount, $62,485 are going to be forgiven. This is more common than you would believe. Okay, well, a lot of people qualify for forgiveness, they just don't understand how it works. Okay, but student loan forgiveness is a real thing. But understand it's not a magical button where we just press the magic forgiveness button and your loans are gone.
Okay. If it were that easy, right?
Yeah, exactly. All right. So here you have an example. This individual, what a lot of people don't realize is that when you go to school, every semester is usually 2 loans per semester. So if you go to school for 4 years, that's 8 semesters, and you end up with 16 loans. In some cases, it's a little more than that. In some cases, it's a little less. But each loan is its own separate line of credit. Okay. So a lot of times people are somewhat managing their student loans, but when they try to apply for a mortgage or a loan of some sort, they don't qualify because they have so many open lines of credit. And as you can see, if you look at this example, I know it's a little hazy, bear with us though, but if you look at this example, you'll notice that in the dispersed amounts, that's how much each loan was. But if you look in the outstanding principal columns, in almost every single case, the loan has a higher balance, not including the outstanding interest columns, but the principal columns. Basically, this individual would be considered upside down on a total of, we have 15 loans minus the one that's, so it's 14 loans altogether. So this person has 14 student loans and they're upside down, each one of them, because they owe a higher balance now than what they had originally borrowed. Okay. And I'm sure, as you can imagine, that would really be, present itself as an obstacle when you're trying to purchase a home or get a loan or get approved for a loan.
Right on.
Okay. All right. We're
Hey,
gonna
Will, can I stop you real quick? Just
Yeah.
because we had a couple of good questions coming in here. I think the group might benefit from it. But you just spoke about the public service loan forgiveness, and maybe this is a kind of a question around loan forgiveness in general. But could you guys speak to sort of this notion out there that most people, even if they try, don't get the loan forgiveness, or why more people don't take advantage of it?
I think a lot of people believe it's too good to be true. I think a lot of companies, when they advertise student loan forgiveness, they don't really explain it well. And there's a lot of companies out there who are just cold calling people, trying to push student loan forgiveness on them. I myself don't have any student loans, but I occasionally get those calls. And I'll act as if I do have student loans when these telemarketers call me, and I'll listen to what they have to say. And I know how the program works. And when they explain it to me, it's not accurate at all. So what ends up happening is that you do have a lot of people out there who are misrepresenting the program or not explaining the program thoroughly, and basically taking advantage of the public's ignorance and selling them these programs that don't exist, or they don't work the way the people are explaining to them. So student loan forgiveness kind of has a negative, just like a negative connotation because of all the, unfortunately, a lot of these telemarketing companies. However, student loan forgiveness is real. I've been in this industry since 2004, and student loan forgiveness really exploded on the scene, I want to say around 2011. And so there are a few different forgiveness programs out there. And so what we here at Diploma Debt would do is when we're speaking to you for a consultation, we look at your student loans and we see which forgiveness program is going to save you the most money. Now, going back to the public service loan forgiveness program, that's actually the best forgiveness program because it's a shorter amount of time to see the forgiveness. And in most cases, people who qualify for public service loan forgiveness see a lot more forgiveness than the average person does. If that answers
Gotcha.
your
question.
Appreciate that. Sorry, I didn't mean to throw you off there, but
No, that was
I feel
perfect.
like the group could benefit. Appreciate that.
Yeah, no, that was a great question, and take into account, right? Experience matters here. At Diploma Debt, we've seen so much change in this industry as student loan forgiveness has evolved. So guess what just happened? A new administration is in place, right? There's going to be changes, and we're staying abreast of that situation by helping us find the right solution that's going to work for you. But like I said before, they're like snowflakes. Everyone has a pattern, but everyone has a unique situation. So you want to take a closer look as to what you have, and you have a partner to help you do that. You need to take a closer look as to what you have to know what you're going to qualify for. So we got another example here.
And real quick, one more thing about public service loan forgiveness. It didn't really get popular, I want to say, until 2012, 2013, but it's actually been around since 2007. It was passed by Congress back in 2007. So a lot of you qualify for it and can take advantage of it unbeknownst to you. So that's another reason why you want to get with us later on, so we can kind of dig into that and see how far along in the process you may already be.
Right on.
Okay.
I mean, these are some great examples here, Will.
Yeah, so let's just skip to example. Let's go with example C. Okay, so you have somebody who currently owes $112,005 at 6.9%. Their annual gross income is $52,600, and they're currently paying $1,295 a month. Okay, well, at least they're supposed to pay that. But we all know that if your annual income is $52,600 a year, there's no way you can afford a $1,295 payment for student loans. It's not your rent, it's not your mortgage, it's a student loan. And I mean, God forbid you have mouths to feed and other bills to pay. It's almost impossible. So what we're able to do for this same individual is actually lower their monthly payments down to $288 a month. And and in this person's case, they're going to get $68,000. Well, they're through the program that we already signed them up for, they're going to receive $68,613 in forgiveness. Okay. which is money that can go towards your retirement, money can go towards whatever else. But the last thing you want that money to go towards is your student loans.
That's right.
Okay?
That's what you call a financial game changer.
So let me also give you another example here. So a lot of times your student loan companies, they only are focused on themselves. The student loan companies are in business for the student loan companies. They're not in business for you. When you first took out your loans, you went to the financial aid department at the school that you went to. The financial aid department was concerned about the school getting the money. They weren't concerned about your education. And the last thing they were thinking about is how are you going to make those payments after you graduate. Okay. When you receive the money, the lender gave you the money. The lender didn't care what fields you were going to go into, how much money you were going to make, or even if you could make the payments. Okay, because the lenders guarantee the money anyways. And the reason, let me back it up a little bit. Your student loans are federally guaranteed, which means the federal government guarantees the lender that whatever you don't pay, the government will pay. That's why the lenders have no problem giving you as much money as you need, regardless of your income or your credit. All right. So what ends up happening is you graduate from school, you have these student loans, or they're calling on you for payments, and you call them up and you say, in this case, this client is somebody who was dealing with Navient. I'm sure a lot of you are familiar with Navient. So they call Navient up and they ask Navient, what can they do? They need something, and Navient immediately just puts them to forbearance, gets them off the phone, moves on to the next client. Okay. So eventually the person keeps calling back, keeps calling Navient back, looking for a more permanent solution. And so what Navient wanted this particular person to do was they're going to put them into an income-driven repayment plan that's based off the income and family size. Okay. So in this case, follow me with these numbers. I'll go slow and I won't be too wordy, I promise. But in this case, the gentleman, the borrower who owes the money, he makes $52,000 a year and his wife makes $80,000 a year. Okay, they have 3 kids, and currently his balance is $97,914, and his interest rates are right around 6%. Okay. Now the problem he was having is that Navient, before he got any help, Navient wanted him to pay $1,087 a month, which is a stretch, when you have a family size of 5. And you have other bills to pay, car note, mortgage, etc. So in this case, the Navient wanted to put him on an income-driven repayment plan. Well, he makes $52,000, his wife makes $80,000. Navient was looking at both of their incomes, and they dropped the monthly payment from $1,087 a month down to $717 a month. Great. The problem is, instead of him paying back $130,446 like he was originally scheduled to pay back, on this new plan, Navient had him scheduled to pay back $172,080. So we're looking at, over a $40,000 increase. Okay. So what Navient didn't tell him is that through the government programs, you can, if you're not able to reasonably access your spouse's income, you don't have to include your spouse's income. It's an option the government gives. But Navient's not going to tell you that because Navient wants you making a higher payment. So the gentleman called us. What we did was, not only did we take his loans away from Navient so he'll never deal with Navient again, those of you who hate Navient, but also what ended up happening is, because of the option of excluding the spouse's income, we got his monthly payments down to $106 a month. Okay. We got his payments down to $106 a month. And based off his current income and family size, he's going to pay back $25,000, just over $25,000. I believe it's like $25,440 is the exact number based off what his family size and income is right now. But I mean, can you imagine going into a situation where you're going to pay back $130,000 and now you're only going to pay back $25,000 and walk away from the rest? So Navient and a lot of these other big student loan companies, they're not in it to help you. Their customer service reps, unfortunately, are just trained to provide you with a quick resolution, a quick band-aid to your problem, get you off the phone so they can take the next call.
That's something.
Right.
You know, it's really true, guys. What you don't know can cost you. And that's the truth, right? Ignorance is expensive. If you're not aware as to how these programs work, it could be costing you thousands of dollars. And we've seen real life examples, and we work with clients through from the beginning to the end to a conclusion. You know, in my personal experience, I had a client who was stuck with a $1,500 payment being serviced from one of the old loan servicers, and she had qualified for a bunch of options, but she was not being informed of this, and it was costing her more than her rent every month just to pay a student loan. And when we sit down and go through the details, the real nitty gritty of your student loan, that's the work, right? You saw that screen before that Will was talking about with the list of all those loans on there, right? You can imagine how much fun it is going through every little detail to make sure everything's correct. But that is the nitty gritty of making sure you find the right solution. So those are great examples, Will. And then, by the way, we'll just hop onto example E here if we want to close this one out, because I know real estate was another option that people are concerned about when it comes to student loans.
Yeah. So like we had showed you in the example earlier with the list of student loans that the other individual had. So first of all, every student loan is its own individual line of credit. So through our program, we're going to consolidate your loans to the U.S. Department of Education. It's going to show that all your loans are paid in full and that you just have the one consolidated loan instead. So you're going to go from multiple open lines of credit down to one line of credit that's in good standing. That's going to have a positive impact on your credit score. Your credit might already be good, but when we're done, it's still going to be better. All right. Now, often these mortgage companies, like the FHA lenders, they want to see amortization on your loans. So what we do for a lot of people who are looking to buy a house but also need student loan relief is we'll consolidate you. We'll put you into a program where you're not going to get any forgiveness at all, but the payments are very low, and the lender, your new mortgage company, can see how your loan is going to amortize over time. So once you're in your house, then you call us back. We'll put you into a forgiveness program at that time, so your payments are even lower. You can breathe. You understand what I'm saying? You have money left over at the end of the month to put things towards things that you want to put them to, and then you'll get some forgiveness, but you also were able to get your house in the long run. Actually, I had to do this for several family members, and it worked every time.
It's like a stepping stone towards a strong financial plan. Once you get your debt wrapped up, you're ready to make the next step forward with your money. It's a cornerstone. So, I mean, look, there's a lot of stories that go into this process that we could continue to talk about. But the reality is we want to try to find the right plan that's going to fit best for you. The world of consolidation has changed, right? These loans don't operate the same way as the rest of the lending world operates. It's its own kind of asset class. It requires its own specialization to make sure you're getting the right program in place for you. So that's a big knowledge gain right there, and an insider's look as to what's really happening in the world of student loans. But wait, it gets better, guys. I'm going to pass it over to our founder, Jeff, who's going to talk a little bit about what's going on with rumors in Washington, D.C.
All right, thanks everybody. For the interest of time, I won't bore you guys with tons of details. I know we're probably getting close to people's attention spans drying up, but obviously we have new leadership in the White House. Obviously, President Biden's been campaigning on certain ideals that they'd like to push through for the next 4 years. And there's been some news stories like, hey, how we're going to affect your student loans. There's been one news story where he's going to look to begin about 10 grand off the top of every borrowers. There's some news stories that say, maybe you have to be earning under a certain amount to get that, depending whether you're individual or you're married with a family, but you have 2 earners in the house. There's one story float around that it could be a really high number, like 50K, and that was a Chuck Schumer, Elizabeth Warren based aspect of it. And I think, a lot of that's just rhetoric because the Democrats have Congress right now, and they're like, well, let's just get everything up front. There was rumors he might try to push some of these things through executive order. Now, on his first day of office, he signed 34 executive orders. I don't think he's going to take that approach with wiping away student debt. There's another thing called a tool that the president can use for balancing reconciliation so the way that works is instead of taking the required 60 votes that usually Congress has to do to pass a bill, it will get you down to just a majority, which is 51. But if they do that, he's got to think about how he's going to, the next 4 years, going to play out the White House from a bipartisan point of view for negotiating, other things they want to get done. Now, Biden's got a lot on his plate he's trying to get done. He wants to raise the minimum wage to $15 an hour. That alone will kind of take away that option of putting this COVID-19 bill past the reconciliation budget tool, because it doesn't quite fit in the parameters of that tool to use it for. So take that reconciliation away, then he needs 60 votes. He's going to have to negotiate a little bit what they want to do. He wants money for infrastructure spending. He wants the spending to reopen the schools with proper protocols for COVID. How big are those checks going to be that people are going to get? There was rumors for 2,000, rumors of 1,400, rumors of 1,200. Again, do you need to earn under a certain amount to qualify for that? So there's a lot of speculation. From what I'm reading, the further along we go in this process of negotiation, they think the number is going to get smaller. And what if they do forgive a certain balance? What happens with next year's class of kids that graduate college and the year after? It doesn't solve the problem. So it's just putting a small Band-Aid on some people who already went through school. And it doesn't help the people who were good in paying off their bills prior. So I just think, a lot of that is let's ask for the moon and part of negotiations, and then in that negotiations, maybe we get down to the really nitty gritty and what really could pass. So don't get your hopes up for a big number to get passed. I would be more prepared to be on a more cautious side to see a smaller number get passed with all the initiatives that Biden wants to accomplish. But if numbers do pass, how is it going to affect you? Well, I'm going to kick it back to Will to kind of tell you how we can still help you.
All right. So yeah, so if the $10,000 gets passed, I wouldn't put any I seriously doubt the $50,000 will get passed, but the $10,000, if that does happen, it's fine, because more than likely you owe more than $10,000. So if you take advantage of any of the programs the government has to offer now, you're still eligible for anything they come out with in the future. So we enroll you in a program now, and then Biden passes, $10,000 forgiveness, you're still going to get that $10,000 forgiven. However, if you have FFEL loans, Perkins loans, a lot of Parent Plus loans, things like that, you need to get with us so we can get those loans converted into direct loans. That way you can take advantage of the forgiveness that if the Biden administration passes forgiveness in the future, you'll be eligible for it, but not while your loans are FFEL loans. They have to be direct loans, and that's what we do. We'll convert your loans from FFEL loans into direct loans, because at the end of the day, FFEL loans don't have any forgiveness. The only forgiveness that FFEL loans come with are disability forgiveness for people who are 100% permanently and totally disabled, or people who pass away. Those loans are forgiven then as well. But outside of that, FFEL loans don't have any forgiveness. So what you need to do is allow us to turn those loans into direct loans. That way you can take advantage of one of the forgiveness programs that are out there.
That's right. That's probably one of the best crystal balls I've looked into to look into the future, guys. That was really good. So how diploma debt helps? Well, we're ready to offer a free consultation to help you take that deeper dive into your loan so you can learn about what you have. We provide borrower education like we're doing right now to help educate folks on what the options really are. And we have a highly trained staff to work with you every step of the way. Because like I said before, who wants to call a random 1-800 number that might actually not give you the advice you need? We want to treat you like the individual you are and give you the service you deserve. We make sure your paperwork is all processed. Oh, and by the way, we're going to follow up with you once a year for an annual service checkup, just to make sure things are going smooth. So, if you're already in a consolidation, but you're not on the right payment plan, we can definitely help you out. There's definitely more to the conversation than just being one and done with whatever it is you've had in the past. And we also have no problem working with business owners to help provide these services as an HR benefit. So if you know anyone who works in a business that has employees that are concerned about student loans, recognize that those student loans can roll up to become a problem of your business if your employees aren't paying attention, right? If they're more concerned about student loan problems. it's going to become a bigger problem. So we work with companies to help educate and upgrade their student loan repayment program. So why do it the hard way, right? Just click the easy button. Guys, if you want to schedule a free consultation, you can email us at info@mydiplomadebt.com. Give us a call, 901-235-5094. We'd love to get you scheduled for an individual follow-up so we can take a closer look and help you find that financial freedom you're looking forward to. Who wants to let their debts get in the way when you got a bright future ahead? Guys, thank you so much for joining us, and we'll open up to some Q&A.
Yeah, let me just dive in here quickly if I could. So great job, guys. I learned a lot myself. So there's so much information out there. It's hard to know, what's right, what's wrong. And obviously every situation is unique and there's no one size fits all recommendations here. So that's why I think the point is, the takeaway is, are you in the best situation you possibly can be given what you have to work with? Maybe the answer is yes. Hopefully the answer is yes, but get that confirmed, right? So, our hope is that whoever follows up with these guys, you can find out in 20 minutes or a half hour, whatever these meetings typically last, that, hey, you're in your sweet spot. Best of luck, but just know, have some peace of mind that you are where you should be, or there's probably a more optimal solution that you might want to at least consider, and here's what it takes to get there, type of deal. So we'll send a follow-up tomorrow that will be a recording of the presentation, transcription of the presentation, the slides themselves. So the deck will be there. I know not everybody can be there live tonight. So for those of you that are not listening live, you all are going to get the deck, and then there'll be a scheduling link for anybody that wants to take advantage of that can book a time on Ken's calendar. And just make sure that you're in the right situation for you and for your family. And then Ken, if there's any questions in Q&A that you all want to hit on now, or if those are better served for a one-on-one follow-up, I'll let you guys decide what makes the most sense. But thanks for coming out tonight. Thanks to Diploma Debt for, I think, providing an awesome presentation. Again, hopefully you all learned something. That seems to be most of the feedback that we're getting on the sidebar here. Again, I'll let you guys take any Q&A, and again, we'll follow up tomorrow with these deliverables, and wish you guys all the best moving forward.
Yeah, for sure. Thank you, guys. So Will, actually, one question I have that just comes to mind is you'd mentioned how extending a loan repayment date out and then having loan forgiveness, and that triggered off a thought in my mind, because when most people think of student loans and they think of extending the period of time, they think it's going to cost them a lot more. But as it turns out, it looks like when you extend the period, you can still qualify for loan forgiveness. Can you kind of walk us through how that works?
Yeah, those are for examples that we showed you guys. Most of those people were on a 10-year plan. In some cases, they went out to 20 years. However, the total payout amount was still lower. So in some cases, you got to ask yourself, I'm just making up numbers now, but you got to ask yourself, do you want to pay $800 a month for 10 years when you qualify for $40 a month for 20 years? So yeah, in a lot of the cases, not public service loan forgiveness, but anyone who doesn't qualify for public service loan forgiveness, but still qualifies for some sort of forgiveness. Yes, the life of the loan is extended somewhat. However, the total payout amount is still a lot lower. I know when it comes to a traditional loan, you think you lower payment, longer term, I'm going to pay more in interest. But in this case, with a lot of our forgiveness programs, a lot of times you don't even touch the interest. You'll never pay back all the interest or even the principal for that matter. So, just depending on your situation. And a lot of times people think, well, it's based off income and family size. And I don't have a large family size. I make really decent money, I make good money or whatever case may be. That doesn't matter. We've had people making, single men or women, whatever, don't have any kids, making $90,000, $100,000 a year, and we're still able to dramatically lower their monthly payment, but more importantly, also lower their total payout amount. So you're going to feel relief two different ways. You're going to feel relief with your monthly payments, and you're going to feel relief with the amount of money you pay out over the life of the loan.
Right on. And that's a really important distinction too, is that public service loan forgiveness operates one way, but in a broader sense, there is another student loan forgiveness that operates with a longer time period that goes beyond 10 years. And by restructuring the loan that way, you could end up saving a boatload of money. You just have to be able to take a closer look at all that. So that's really powerful. And then another topic, just to get it out there before we wrap things up, was as part of financial planning. I'll just add on to this. Whenever you're trying to project ahead with whatever financial plan you're on, whatever debt you have is a part of that equation. Okay. So the more of it you have, the more of that baggage you're carrying into the next financial decision you're trying to make in your life. So if you're trying to buy a house, if you're starting a family, if you're moving around the country, if you're doing different things, 2020 was a year that woke a lot of people up to how they can be financially vulnerable. Okay. And the last thing you want to do is come out of this situation still worried about your student loan debt. So when full repayment resumes in just a few months, you want to hit the ground running with a plan ready to go. You should know how much debt you have, what the payment amount's going to be, how many months am I going to be in debt for, what's the total cost of interest, what's my debt freedom date going to be. These are big ideas that if you're not sitting and thinking about, they're going to overpower your personal finances moving into the future. You want to get control of this and have a solution in place so that way you can sleep easy. Because the last thing you want to do is wake up in the middle of the night where, oh my goodness, what's going on with my student loan, right? So I'm hoping this.
Ken, somebody wrote in there and asked about co-signers. I know we don't have a lot of time. I know we're wrapping up at 8 soon.
I'll take that. I'll answer that one.
Go for it.
So when it comes to federal student loans, there aren't any co-signers. Federal student loans are solely the responsibility of the actual borrower. So if you're a co-signer or have a co-signer on the loan, then your loan is not federally guaranteed. It's a private loan. Now, with that being said, often parents have Parent Plus loans and they think they're the co-signer of the loan, but really it's a Parent Plus loan and the parent is solely responsible for the loan. So your best option really is to give us a call or shoot us an email. We'll get you on the phone. We'll look up your loans in the government's database and we'll tell you exactly which loans qualify for forgiveness. And because any loan that we see in the government's database is going to qualify for something. So if it's in the government's database, then that means it's a federally guaranteed loan. Hope that helps.
That's great. Thanks, Will.
Thank you. All right, guys. Well, that's all of our questions. So we'll be wrapping things up, guys. Thanks so much for joining us. Thank you for the CFS team. We're glad to be partnering up with CFS. Bill and Matt. Thanks, Jeff and Will.
Yeah, appreciate you guys. You guys killed it. A lot of information. Just like all our webinars, in a group setting, you got to keep it high level and talk broad strokes. But I think it's great that you guys offer these free one-to-one consults. So you can talk in detail, specifically about someone's situation. So good on you guys. Glad to be partnered up here. So that's. Oh, and the last thing is we will be sending this out. I think we spoke about this in the beginning, but we will be sending out this recording along with the slide deck sometime tomorrow. So everyone can, if for some reason didn't get to attend tonight, they could watch it at their leisure.
Very cool.
Nice job, fellas. Great job.
Thanks,
Great
everybody.
job.
Be safe.
You get in, and we'll follow up tomorrow. Take care.
Thanks, guys.
Bye, guys.